Hey traders, Akil Stokes here with tier1trading.com, and thank you for joining me for, another trading video. It's been an excellent week. This was our first official week here at Tier 1. Last week we did the free emergence event. This week we actually got rolling, and it was, pretty fantastic. We had a great Q&A session on Monday. Tuesday through Thursday was filled with live trading in both our London and New York live trading rooms. And then this morning, right, Friday, we held a live accountability session. So a chance for traders to share their stories and really kind of having it like an open counseling session, which is pretty neat and was very popular. So we're excited to keep that going each and every Friday. Now, what I want to show you today was a trading idea that is on my radar for the week ahead. And I'm going to cut this up in two ways, right? I'll be honest with you. I'm lazy. I don't feel like recording two videos. So I'm going to have a YouTube only version of this video. And then I'm going to have a tier 1 only trading of this version of this video as well, simply because it makes my life easier. So for the YouTube version, here's what we're going to do. I'm going to show you a brief recap of an idea that I put out to our traders on Thursday before the non-farm payroll, looking at a currency pair and kind of doing that if-then, right? If we get this type of reaction, then we can look for this. If we get that type of reaction, then we can look for that. And then I'm going to come back and follow up on that same pair, showing you what's on my radar for the week ahead. For you guys watching on the Tier 1 website, for you guys that are clients, you don't need to see that recap again because it's already on the website for you. So I'm going to skip straight to the follow-up on that pair and then also follow up on the other pair that we talked about on that video as well. So hopefully it doesn't get too confusing. But let's hop into the charts, or in fact, Tier 1 version will hop into the charts. YouTube will hop straight into the recap of the Trading Edge video that I put out this past Thursday. Spent 6 minutes off the charts, but again, I want to try and answer some of these Q&A questions for you guys in these Trading Edge videos. Now, today we're going to look at a few opportunities here. We're going to do a lot of these opportunities are the same. Let's start with the pound dollar because this has two opportunities and this is a dollar pair. So currently here on the daily chart on the pound dollar, we are putting in a double top, right? You can see price action has rallied up. We have retraced off this level. We have come up to put in a double top. It's not technically a double top until the day closes, but I doubt, it's 12:30 right now, I doubt we're going to close above this level. So there's good chances we're going to have a double top. Now, what's important is the location of this double top. And we had some very good conversations in the live room about this, about not taking trades just to trade, but taking trades that you actually think will work out. And if you look at where we're at in comparison to previous price, we're not really at any significant level of structure. Yeah, we're inside this kind of consolidation mess that we had pre-Brexit and whatnot, but we're not at any type of previous structure resistance or support. We're kind of right in the middle. So there's nothing that really stands out to me. There's not enough here at this double top for me to want to take this trade. So here's what I'm going to look for. Two opportunities. I don't know how non-farm is going to affect the market, but I'll give you an opportunity for both. So let's say we see a bad number or maybe a good number and the market just reacts negatively to the dollar because that's what it wants to do. And we see a breakout, right? We see a breakout above this double top. Boom, something like this. If I drew it on, right? Something like this, right? So that would give us a higher high, higher close, right? A higher high, higher close, a violation of previous level of structure. So we identified a higher high, higher close. We then want to predict, right? A higher high, higher close. What does that mean for the market? Well, the initial prediction is that price is likely to continue higher. The next question we want to ask ourselves is, well, if price is likely to continue higher, then where are we likely to continue higher to? And we can see that we have a nice level of resistance, a little supply zone up here as well. And it's not going to be there's not going to be a lot of confluence between them, but we can say right about, let's say 146.70s, right? Anywhere between 146.70s and and $1.50, let's say, there's room for a price to expand to this point before we run into any previous structure resistance. And what that tells us is that we have an area between our highs here at 143.50 to about 146.70s, right? So about 400 pips of potential bullish action. So we then want to ask ourselves, again, we ask ourselves, what is price likely to do? Go higher. Where is price likely to go? We drew a line out. How is price likely to get there? Well, two ways. We can go straight up to that level, or we can do the higher high, higher close. Maybe we get a pullback down to here, and then maybe we continue up like that. Either way, once we have an idea of what price is likely to do, that gives us the opportunity to decide how we're going to attack the trade. And that's going to be different depending on what type of trader you are. If you're a breakout trader, maybe you catch a breakout. If you're a pullback trader, maybe you have to wait for the pullback, then get involved in the dip. If you're a day trader, maybe you just lock in on the range bar chart and look for day trading opportunities on that pair. But the point is, we have significant room to move higher. So if we get a break and close above, our radar should be on buying, 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 buying. All right, so let's hop over to the charts and let's take a look at what has happened after the volatility of this non-farm payroll that we had. And we're going to take a look at the pound dollar. Now, again, it's Friday. The day is not over yet, so technically we could still see some movement here on the markets, but it's about 1 o'clock in the evening or afternoon, and it's Friday, so I doubt we're going to see too much action. But we did get a positive number for our non-farm report, and we did get a bullish dollar move. So as you can see, we did not break above, close above our previous structure high here, confirming the double top that we had last night. Now, the issue remains the same. This double top is still at an area which isn't the best area to look for. So here's what I would want to do. First thing I want to do is I want to go through my IPDE process, identify, predict, decide, execute. And I want to identify what we have. I want to predict what's likely to happen next. And if price action is going to retrace off this level, meaning if this double top is going to prove valid, if we're going to see a retracement, the question I want to ask myself is, where are we likely to retrace to? And the level that stands out to me is going to be right in here. Let me just get my box tool. And we're going to draw it from right here to about right here. This is the level in which I would predict price can rally down to. So think about it between, we just raise this up a little bit. Think about 137, $1.37, all the way down to about 134.50s is that first kind of zone. We can even say, 135 flat, but same thing. It's a daily chart, it's close enough. The point is, this area, right, between where we're at right here and where we're at down here, is an area in which we can potentially take advantage of selling opportunities in the market, right? So we know that we want to be sellers. We know that there is indeed room to make profit, and there's multiple ways you can handle this. I'll walk through a few of them. One, you can take the double top right now, buy it at or sell it at market. Now you're a little bit late. The official close of the double top was at 142.60s. Right now we're about 141.60s. So you're about 100 pips late. You're gonna have to ask yourself if that is if that means a lot to you or not. But you can still get a pretty good risk reward ratio. You can see almost 1.75 to 1 to that area. So it's still a decent risk reward even with entering late. Of course, you can wait till price action retraces or see if price action were to retrace higher as well and get that get an entry at the initial double top area as well, and that would give you a much better risk reward here. The other options are this: you wait for a little bit of confirmation, and one would be the break below this level. So you see the lows of our double top right here. I always call double tops double bottoms. I always call double bottoms double tops. My brain is like, I don't know, it works backwards. Too many years in the markets, I guess. But you can wait for a break below this level, right? So price action to come down, break below that V point of the double top, and then catch a breakout down to this level. Or if you're on a lower time frame, you can wait for a little bit of a retracement and catch any type of trending move in this direction. And what I mean by that is, here on the daily chart, I mean, we probably won't see this either, but here on the daily chart, even if we go straight down, we break straight down to this level, chances are on the lower time frames, and this can be an hourly time frame all the way down to your day trading time frames, chances are this move is going to look more like this. It's going to have an extension, a retracement, an extension, zoop, a retracement. And we're going to kind of ebb and flow and wiggle our way down there. And each time the market puts in a retracement, right? So each time the market gives us one of these pullbacks, this is going to be a chance to hop on a shorting opportunity. The last opportunity would be in the form of a 2618 trade. So we're still looking for a break of this level, and we're looking for a move back up into our 618 Fibonacci retracements. So for you guys that know how to use the Fibonacci tool, bring on that Fibonacci retracement from our second part of our double top here down to the lows here. Look for a move back up to that 618, and that's going to give you a potential 2618 trade. Going to give you a 618 retracement, but a 2618 trade down to this level. And then, of course, you can look for an extension down there as well. So plenty of ways, just to name a few, to attack this opportunity. The point is you should be looking short. You should be looking short. And that helps because it just eliminates half of the battles that are in our head. Whenever we look at a price chart, we tend to look at things, you know, from both perspectives. Ooh, I can sell here, I can buy there, I can sell, I can buy, I can sell, I can buy. And we have all these ideas floating around our head, making us confused. Some of you have probably heard me use the term paralysis analysis, where you see this a lot with indicators. You have so many indicators on a chart that are giving you so many contradicting ideas that you just sit there and you're like, you freeze up and you do nothing, and then the trading opportunities goes away. So the best thing that I like to do is I like to eliminate half those ideas. Instead of wasting energy on thinking of buying ideas and selling ideas, I like to do true analysis. I like to put myself on one side of the market. In this case, as a seller, I eliminate all the buying ideas, and now I can focus 100% on different ways that I can sell. So I hope you guys enjoyed this video. Again, tier 1 members, hold on 1 second. We're going to go into the euro yen next and talk about that, the big trend continuation move that's setting up. But if you're on a YouTube channel, do me a favor, hit that like button, hit that subscribe button. Of course, if you're interested in being involved with us at Tier 1 Trading and getting videos like this every single day to you, as well as live trading, head over to tier1trading.com and sign up for a membership. No longer are we doing big, expensive $5,000 training courses. We're doing monthly memberships for a very, very, very low cost. So make sure you get involved, take advantage of it. The community has been amazing. We had high expectations, but they've even exceeded that. And well, just get involved with like-minded individuals that are going to push you in the right place to be profitable, independent, consistently profitable traders. And I'll see you guys next time I do a video. Now, tier 1 members, let's head back to the charts. I don't know why I exited. Let's head back to the charts. I'm going to go to a white chart, actually. We're going to look at the euro yen. Actually, we'll stick with the same charts here.